Hello everybody, welcome back to the Tokyo FinTech podcast. For today's episode, we're listening in to a webinar that was hosted by our friends at Merkle Science. So I'm just going to tap Ian on the shoulder. Ian, just take it away.
Hi, thank you everyone for dialing into today's webinar by Merkle Science on the topic of Is Hong Kong still a competitive jurisdiction for virtual asset businesses? Before we begin, allow me to first do a short introduction about myself. My name is Ian Lee, and I am one of the founding members of Merkle Science, as well as the VP of Business Development. So Merkle Science, very simply put, we are a company that detects, investigates, and prevents crypto crime. We're headquartered in Singapore, but we have offices as well in Korea, Japan, as well as in India. I actually had the pleasure of making multiple trips down to Hong Kong, and I found it to have a very thriving blockchain ecosystem. Many companies were attracted by the capital to be found over there and had set up offices. Since then, there's been a number of regulatory changes, as well as the introduction of the STO framework. And asset managers, as I understand it, can now also hold a certain amount of their portfolio in crypto. In today's webinar, together with my distinguished panelists, we will explore some of the various issues, the theme of determining whether Hong Kong still remains a competitive jurisdiction. To kick things off, what I'd like to do is first invite each one of my panelists to do a short introduction about themselves, and to share about the work they're doing in this space. So in typical gentleman fashion, ladies first, Urszula, would you like to kick things off?
Thanks, Ian. Sure. So hi, everybody. My name is Urszula McCormack. I'm a partner of an international law firm that's headquartered in Hong Kong, Kingwood Mallesons, and I head up the FinTech and blockchain practice in Asia. My remit is to look at all things financial regulatory across banks right through to developers, and so work a lot on virtual asset issuance right through to the development of custodians, exchanges, right up to sort of government level projects. My key focus area is financial regulation, but also data regulation, and then the pointy end of financial crime compliance for both the sort of institutions that operate at the sort of cutting edge of innovation, but also traditional financial institutions. What's been really important to me over the years is to be involved at the sort of industry and policy levels. So I sit on the SFC's FinTech Advisory Board, been very heavily involved in the FinTech Association over the last few years. So the work that I do is, yes, advising clients, but also helping to sort of push forward the sort of narrative on regulation.
Thank you. Jehan, would you like to go next?
Sure. Thanks, Ian, for having me. My name is Jehan and I am the managing partner of Kenetic. We are one of Asia's earliest kind of investment firms, blockchain and cryptocurrency. We're based here in Hong Kong, obviously, and we invest across the world, but with a concentration in Asia, and we invest both in equity as well as tokens. We also have a high-frequency trading desk and are involved in a number of other things as well in the community. So helped to start the Bitcoin Association of Hong Kong in the early days, and I started the Ethereum community in early 2014. So I've had the good fortune to be able to see multiple cycles of Hong Kong's growth and development and expansion in both blockchain and crypto, and of course, very, very proud to be on the journey with Merkle Science. So thanks again for having me.
Thank you, Jehan. And Alessio.
Hi, thanks for having me here. So my name is Alessio. I'm the co-founder and CEO of HexTrust. We are a fintech company headquartered here in Hong Kong, and we focus on providing custody and building the financial markets infrastructure for digital asset to financial institutions. Prior to setting up HexTrust, I was an engineer. But funnily enough, I started my career Italian SFC, where I was working in the market abuse department. Before and after that, I had different roles, different banks here in Hong Kong. Then 3 years ago, together with another co-founder, we set up HexTrust to provide infrastructure to financial institutions who want to enter the digital asset space.
Thank you very much for the introductions, everyone. To kick things off, for the benefit of those in the audience who may not be familiar with the current regulatory climate, it would be great, Urszula, if you could provide us a broad overview of how crypto is currently regulated in Hong Kong.
So what I wanted to do is to set out how you generally look at regulation of this asset class generally, not just in Hong Kong, but globally. And there's generally two key buckets that you look at. You look at direct regulation of the asset. Now, it might be a subclass of those assets or the asset class as a whole. And then you've got indirect regulation. And what I mean by indirect regulation is that you've got the regulation of asset managers, banks, others, that then drives the conduct of others in the ecosystem. So to give you an example, if an asset manager has to apply apply certain standards to its choice of a custodian, then that drives the behavior of that custodian indirectly through that regulation. So two key buckets. And I'll focus on this side because the direct regulation of virtual assets as a class has been where there's been the most divergent globally. And what we're seeing at the moment is that as an asset class generally, Hong Kong does not regulate virtual assets as a whole, but it does regulate a subset of those assets. And that's particularly those that fall into already regulated buckets, securities, for example, or if they operated like a stored value facility and so forth. So Hong Kong is very competitive in that sense and attracts a lot of interest because if you were just to operate an exchange where it's, really just trades on a Bitcoin on a spot basis, you don't have any specific regulatory regime that applies to that exchange. But as soon as you veer into security tokens, well, you're in the world of regulation. So that's sort of where the state of play is at the moment. Now, what's changing globally is that virtual assets as an asset class will be regulated globally in the future going forward. And Hong Kong is on that track, but is not sort of implementing that imminently. And the reason for that is the Financial Action Task Force, which is a global standard setter on AML and really drives regulation, not just on AML standards, but also licenses, has effectively recommended, which means kind of effectively required, its members to have a degree of regulation and oversight over the whole sector. So that's something that we look ahead to, but as a short and medium term, does not affect the industry. What I would say, I suppose, as a caveat to that is there is this opt-in regime, which if an exchange wishes to have a security token, for example, on its exchange, it can opt its entire platform, not just that component, into the Securities and Futures Ordinance regime for exchanges of securities. And the SFC then takes an overall look at its operations. Now, that regime is still in its sort of reasonable early days and is sort of tracking along. And there's a lot of people who are in that, or a small number actually, that are in that group that will progress through it. But what that means is that in the reasonably near future, you'll have exchanges that are regulated by the Securities and Futures Commission that are subject to the usual prudential obligations that you would expect of those sorts of highly regulated institutions, and that will enable for certain customers a degree of comfort. But there are certain around that. But that's exchanges. There's also for brokers. Again, the SFC regulates securities brokers, so security tokens are in that mix, but brokers of, simple sort of virtual assets are not in that mix. The sort of additional kind of players that are usually in the mix are custodians, payment services providers, lenders. So, once you move into the sort of DeFi, or not quite DeFi, but sort of finance side, there's additional layers of regulation that kick in. But what really makes, I think, Hong Kong quite competitive at this point is that it adopts a reasonably neutral approach to the asset class and still has a reasonable amount of maneuvering without automatically hitting a regulatory regime, unlike a number of other jurisdictions where it's either completely restricted, like in mainland China, or you've got this sort of very broad lot of legislation like we've seen Singapore enact. I'll stop there by way of introduction.
Thank you, Urszula. That's very helpful in setting the landscape. So, it's interesting. A lot of people think that people get into crypto are people who want to escape regulation, but interestingly enough, we've seen that as countries introduce licensing regime, it actually serves as something that attracts companies to come in. Again, going back to Singapore, where I'm familiar with the Payment Services Act licensing requirement out, we've seen over 200 applicants trying to apply for that license. And then going back to the Hong Kong side, one of the interesting things that I've read as part of the security token framework, it is mandatory for these exchanges to use a custodian to manage the risk involved with those digital assets. So, I'd love to hear of your perspective, Alessio. How has this changed? Have you seen an influx of companies approaching you as part of the licensing application? And what are your general thoughts?
Okay, I will take this question from two different perspectives, right? So one perspective is the regulation. Then obviously, yes, the custody part has to be taken into consideration when you set up a regulated exchange. Obviously, the custody part can be done more as an internal function within the exchange with certain kind of segregation of business activities, or it can be outsourced to a third party. But certainly, it has to be taken into consideration. On the other side, apart from the regulation, there are certain requirements that in any case exchanges have to comply with in terms of custody. And these requirements have been, I would say they are quite strict as of now. It is becoming a very specialized activity. We're seeing more and more interest in outsourcing to specialized third parties. And I'll give you some examples. So in the case of the SFC, there are requirements in terms of the wallet structure that exchanges have to put into place, which amount of assets can be kept in hot wallets, and which amount of asset can be kept in cold wallet. This implies that any entity that enters the space has to put in place a structure of wallet with cold wallets and hot wallets and some kind of transfer mechanism between the different wallets. On the other side, there are requirements in terms of insurance, which are quite strict. And obviously for smaller, newly set up entities where custody is not their main activity, putting in place a comprehensive insurance policy might be quite expensive. And hence the newly entrants into the space to actually rely on third-party custodians that have already put in place this infrastructure.
Going back to you, Jehan, that, you mentioned, you've been one of the early entrants in this space. You've had the benefit of seeing the crypto ecosystem go through multiple cycles, as well as see other jurisdictions introduce licensing regimes. What are your thoughts in Hong Kong's approach to this? And what would be your advice to a virtual asset business looking to enter into the Hong Kong space?
From the very beginning, I think my first meetup for Ethereum was like in a bar, in a dark bar in Shengwan. 5 people showed up, and we had Stefan Tool, who was very famously part of DAO Hack. And so it's come such a long way since then. It used to be, like you said, that escaping kind of regulation, escaping the gaze of the government was one of the kind of features and benefits of the technology. But obviously, it's kind of flipped. And really what the technology is really being seen as is a tool for efficiency, for transparency, for kind of scaling digital businesses, the transformation, kind of digital first type of existence. And I think that really blockchain and crypto really is the framework for that and the economy around it. So with that in mind, the entire world is not becoming less regulated. It's becoming more regulated, becoming more controlled. In some ways, to a fault, it's becoming more siloed inside of its particular jurisdictions, and countries are walling themselves off literally as well as increasingly digitally. The move towards regulation and regulated jurisdictions and operating as a business, both digitally inside of that context, is necessary. So to answer your question, what would I advise companies to do? If you want to be a world-class company and attract high-quality investment and investors, you really do need to not only consider, but find a way to build a business inside of this framework. There are many companies which decide not to and are very active in, say, DeFi and, are banking on a completely unregulated and completely borderless digital economy, which is also legitimate. But it's just about business opportunity, right? I'm not placing any judgment on what's good or what's bad. It's about market size. The regulated markets are going to be exponentially orders of magnitude larger than the unregulated markets. And it's just a matter of what kind of company do you want to have? Would you like to be able to take advantage of the institutional flow, institutional trade, regulated retail customers? If you want to attract that market and you want that business, then you should go get regulated and you should optimize for the best jurisdiction to operate in. I actually think that our good friend Alessio and Hex Trust, who is actually a really good example of this, especially here in Hong Kong. In Hong Kong, we've been fortunate to have a relatively hands-off type of approach so that companies can build, having the kind of advantage of rule of law and also having the advantage of world-class vendors and professional services across a range of manufacturing and supplies and finance. They're really benefiting from operating and being able to attract top-level banks and the talent that comes along with that. So that's kind of how you would need to kind of leverage Hong Kong in that space. If you want to be a footloose, fancy-free kind of DeFi project, Hong Kong might not be the best jurisdiction for you because the optimized business scenario here is to take advantage of the types of resources. We don't have deep, kind of developer resources the way that, Silicon Valley or Eastern Europe might have. So that's kind of how I see, what you should be thinking about if you're starting a company out here.
Thank you, John. That's very useful. And you've painted a very attractive picture of the Hong Kong market. But since we have the benefit of a virtual asset company over here, Alessio, would you mind sharing your personal takes on, what attracted you to set up operations in Hong Kong?
There are advantages and disadvantages, right? So I think what Jehan mentioned is obviously very important for us. We believe in the regulated side of the business. So we have to be in a jurisdiction where there is a framework, where there is history, where there is trust in the financial markets and the other activities, especially for the type of business activities that we carry out, which is one of the ones that is most based on trust, right? So the custodian activity. So in the specific case of Hex Trust, our main targets are banks and other regulated financial institutions. So obviously in Hong Kong is where we can find all of our target clients very easily. This is a very critical point for our choice of being headquartered here in Hong Kong. Secondly, it is true that the technology pool of talents is probably not the largest in the world, but I would say that for fintech companies, you have to have the two parts together. So you have to have the technology people, but you also have to have the banking talents. And here in Hong Kong, we have very good access to banking talents and to all the other professionals that work in the banking industry. The regulatory environment is important, and here in Hong Kong, we have found both, I would say, a capable regulator that has not banned completely the activities or has not imposed extremely strict rules for a nascent kind of business. So I would say a very good trade-off, and at the same time, a very friendly legal and regulatory framework that we can operate in.
And so I'd like to shift focus on the topic of conversation a little bit. And instead, let's look at the financial institutions. As I mentioned before, with regulation coming in, with different technology service providers, as well as traditional service providers being more willing to deal with cryptocurrency companies, I would love to get, each one of your take on, how's the conversation that you've been having with financial institutions changed over time?
Well, look, that's an excellent question, and the perspective has evolved tremendously just in the space of 3 years. We looked back to 2017. It was probably the most untouchable space for any financial institution. I mean, even fellow law firms wouldn't touch it. And for me as a regulatory lawyer, was absolutely no issue to sort of tackle it, and it was extremely interesting. So that was beneficial for us and for a lot of institutions that were really able to sort of grasp it and really roll with it. I think then there was a degree of schadenfreude, as the market sort of fell off at the start of 2018, a lot of financial institutions saying, see, I told you so, this was always a scam, this was always terrible, CEOs were the worst, Bitcoin's going to fall through the floor forever, and we're never going to see it again. And what we've seen between then and now is that it has been a slow build, but it has been a build nonetheless, and particularly around the development of enterprise solutions that leverage blockchain, not necessarily virtual assets, sort of key trend number one, that's sort of well known. But I think increasingly as the development of CBDCs, so central bank digital currencies, whether or not using blockchain or not, number one, but also seeing the value that stablecoins can offer within traditional financial market infrastructure has really started to change the conversation. So probably, 6 to 12 months ago, I was speaking to a lot of large banks that were sort of exploring offering virtual assets, maybe, some more funky stuff for their clients, really now sort of starting to kind of really take a step back and say, well, actually, maybe we really need to rethink the infrastructure as a whole. Can we do it better? We're seeing JP Morgan coin, we're seeing DCEP out of mainland China, any number of other projects, exchanges innovating. And that means that the innovation is really occurring right at the sort of fundamentals of finance. I don't think that the impact of DeFi has been felt really at all at the sort of financial institution level. That sort of potential wave will come, at least so that it's on their radar in terms of the sort of opportunities and the innovation that DeFi really signals. The last comment I will make is that for banks, institutions that are in the virtual asset space, that conversation has also started to change dramatically. And the reason for that is sort of multifaceted, but certainly creating those regulated environments kicked off with the likes of Japan, really creating an ecosystem of trust. Now with FATF, that's changing the conversation for banks. Banks are starting to know what they need to do, what sort of beast, it is that they're trying to tackle if they're trying to onboard that client. Seeing the likes of JP Morgan onboard Coinbase and Gemini, that really is giving greater confidence to at least provide the support of the fiat on-ramps, for example, or at least covering the operating accounts for crypto exchanges or brokers or custodians. So that's what I've seen, and I think that others will have seen similar or indeed other trends as well.
For us at Kenetic, part of our thesis in terms of our investment is what we call an enterprise-first growth strategy, which really means having come through multiple cycles and multiple waves of investment as early as 2014, really. We've kind of learned a lot of lessons and paid our way through some of these lessons about adoption. And so our enterprise first growth strategy thesis is really around this belief that the first 100 million users of blockchain and crypto will come through enterprise. And maybe it won't look like pure public chain, Ethereum kind of applications. Maybe it will be a combination of private chains, permission chains, DLTs, CBDCs, which are not really blockchains, but it's all kind of part and parcel about the wave of change taking many different shapes. So we fully believe in this. We fully believe that the kind of opportunities of growth really lie there. And enterprise and banks form the largest part of that. It's the core of the strategy. So whether it's a Fidelity, whether it's an Ant Financial, whether it's the Chinese government with their CBDC or their BSN national blockchain, or even other CBDCs, that's really where we see the growth coming. And I think that if you're a company out there and you're thinking about, well, what kind of company should I start? I would work backwards from adoption, and I would work backwards from enterprise. It's a double-edged sword because enterprise moves slow and banks move slow. But again, that's where we think the customers are in the early days. DeFi is a thing. It will be kind of very powerful, but part of this thesis around finance and the transformation of capital markets into tokenized or DLT form, we think is really going to be driven by these large financial institutions. And so build the services that they will need, like you guys are doing with the AML stuff. Build the monitoring tools, build the rails. I think that's really where the opportunities are. It's not cool to build things for banks these days. It's not really what people get into startups for necessarily, especially not in cutting edge crypto. But we've seen many dear friends and great projects die because they couldn't get traction. They couldn't get adoption in the 2018-2019 period. They ran out of money. They folded. They made a lot of great tech, but not a whole lot of great customers. And so the pendulum is on the other side now, this kind of enterprise-driven strategy. And I do think it will come back to the middle after this first 100 million users comes on board via enterprise and banks and such. There will be greater opportunities for the startups to basically leverage and create better value and not have to pay their way through the education curve. So that's where I think the real kind of opportunities are. Not cool, not sexy, but super effective.
Now, one of the biggest challenges for virtual asset service providers, not just in Hong Kong, but globally, is this thing called the travel rule, which requires virtual asset service providers to actually share information on the beneficiaries and originators of a transaction. And we've seen many countries struggle to implement appropriate laws, with countries like Singapore already including it in our Payment Services Act, which based on our conversation with clients, we've seen firsthand how much of a hurdle this has created for them, especially since it's unclear how such a requirement will pan out. I would love to get the panel's view on how Hong Kong is approaching this issue.
So I might just here to kick off just a very quick synopsis of what it is. And really, it's a provision that is in the Financial Action Task Force recommendations that usually attaches to wire transfers. So where you're sending money across the globe, the information that accompanies the payment messages or is contained in the payment messages includes certain information around the originator and then the beneficiary. So where it's come from, where it's going to. And that information needs to go across not just to sort of the end person, but it goes through all the institutions. So in a correspondent banking relationship, the information might go through an intermediary organization as well. Now, in payments, that all makes sense because you have a system of messaging anyway. Got Swift payment messaging system, and the actual direction of funds, the messages that actually move the funds from accounts are able to contain that information. Now, what FATF has done is to say, well, we want the same sort of system to apply to virtual assets, which means that we still get that flow of information going across to help minimize anonymous transactions occurring. For anyone who knows anything about blockchain or really, just even a general understanding of it, you don't have that same framework. You don't have a payment messaging system that directs the movement of assets. We can transact peer-to-peer, and there is no necessity to sort of punch in, names and details. You really only need to authorize the transaction with your private key and then have the public address of the destination there. So, has these pseudonymous transactions are very, very easy. In implementing this virtual asset service providers, what FATF is saying is that the service providers, when they send the transactions in virtual assets across, there needs to be sort of basically a parallel movement of information across to the other virtual asset service provider. The key issue there is, well, A, the development of the right technology, and the standards around that. And there's a lot of work that's going on to help establish it so that you can, in fact, implement such an arrangement. But the second thing is how individual jurisdictions will implement the travel rule. So will they require, for example, for all transactions from their regulated virtual asset service providers to go through their wallets, or will they, still enable people to conduct direct transactions more peer-to-peer so that they don't have to comply with the travel rules? So there's differing views around that, and there's a lot of other implementation details. For Hong Kong specifically, we're still a few steps away from that at this point in time, because the FATF recommendations around virtual assets generally, we still have some time to implement that. All of that is working its way through regulators, and we'll see some detail around that. I expect that our regulators, and I know that our regulators are watching very carefully the implementation in other jurisdictions, but I do think that's exactly where we'll see some differences in approach, and certainly a space to watch for Hong Kong.
Well, the travel rule it's a very positive development for the industry and for virtual asset service providers and custodians in particular. In reality, what will happen is that, it will decrease the risk that we run in terms of AML, CFT. It will simplify, from a compliance risk perspective, the activities that we carry out, which is something that we like. And on the other side, it would also basically push all the service providers in the space to actually use specialized custodians or specialized virtual asset service providers that have already implemented the protocol. So we will expect that other service providers in the industry that do not want to implement a whole compliance stack, they will have to rely on custodians like ourselves to be able to operate their business and at the same time comply with the rules. On the technology and implementation side, to be honest, yes, it is complicated to come up with a solution that works for everybody. But I would say that the complication is more at the coordination level to make sure that everybody more or less uses the same protocol, that everybody exchanges the same type of information, that there is a global list of VASPs available for consultation by the other VASPs. So it's more of a problem of coordination, while on the technological implementation is actually something not so complicated, and it will not really create a huge burden for us.
And so with that, before we close out, I'd just like to invite, each one of the panelists to end off by sharing, what are your thoughts on the future outlook for the industry in Hong Kong? How do you see it evolving in the next 3 years?
We will see the regulated exchanges emerge. I think that will provide a really interesting sort of foray to a regulated market for virtual assets. It will be for professional investors only at the start, and then we will see the implementation of the FATF requirements over time. In the meantime, I think that the sort of key questions really are to really get some day-to-day practical implementation sorted out. So, for example, when using analytics, just to get a really credible, solid kind of approach and a reasonable approach to dealing with customers fairly, so that if they are using mixers, tumblers, privacy coins, that sort of not just necessarily excluding them, but really working through a lot of the detail in the FATF travel rule on those types of implementation questions to sort of really have a robust system in place.
Thinking about Hong Kong really as a place for business, we really haven't talked so much about the China CBDC and the China National Blockchain, and this is it's not even 800 pound, it's like an 800 ton gorilla, which is literally going to change the entire complexion of the global economy within the next couple of years. And Hong Kong sits at the doorstep. So obviously things are becoming even more closer. And I think that the opportunities to be in Hong Kong, to be at the doorstep of some of the most exciting innovation and I would say reshaping of transactions and business, et cetera, both on a retail and institutional level, pretty exciting. And, much love to Singapore, but at the same time, you guys are 4 hours away. It's different, right? Like you said, we've got all these developers right across the border. I think that from a professional services and financial kind of standpoint, Hong Kong really does have a bit of an advantage over Singapore in that respect. And that one respect itself is it will make or break generations of businesses. So that's really something that I think people are not. I never hear anybody outside of kind of blockchain and crypto talking about the CBDC and the national blockchain, but it is going to be like a shockwave to everything. So I think that Hong Kong is a good place to be.
Well, I'm convinced. And with that, thank you everyone for attending. I wish you all a good Thursday and Friday and looking forward to the weekend. Thank you, everyone.
Thanks, Ian.
Thank you.
Everyone.
Thank you. Bye-bye.